All right, this is the 2023 Sole Trader V Leahy. So as always, I'll do the workings first and then slot everything in at the end. Um, so it's reasonably straightforward. There's nothing. There's obviously a couple of things thrown in the way they always do, but there's nothing overly exciting that you wouldn't have seen before. So first one, stock at the 31st of the 12th was 82,600. So I put in that 82,600. We've got damaged stock which costs 5,800. So we're going to take away that 5,800 and add on its value now. So there's a net realizable value of 75% of cost. So if we find 75% of 800, or sorry, of 5,800, we'll get 75% of 5,800 is 4,350. So I'm going to take away 43 or add on 4,350, which is the value of the stock. Okay, so there's that working is in every single question that you ever do. So should be no problem with that. Um, so some people you'll work out to 25%. That would be 1,450, and you can take that away either. All right, next one. Goods purchased on credit from a supplier or in transit. So that means we own them, but they don't appear in their stock. So it's one of the few other workings where stock is adjusted. So the stock is on hand. We own it. We've bought it. So we have to include it. So it says goods purchased on credit were in transit. The invoice for these have been received for 5375, which includes VAT at 23%. Now, doesn't matter. It's no record was made in the books, right? So we've bought the goods. So we buy goods from creditors. So our creditors have to increase. So our creditors start off at, let me see here. Creditors will be in the credit column. Just don't see them there. 98.6. We're going to have to add on the amount we owe. Now, it doesn't matter that there's VAT included with creditors. We actually owe them the 15,375, so we're going to add on the 15,375 to that. However, purchases and VAT are not 15,375 because we've bought goods at their cost price. So if we're going to take that 15,375, we're going to divide it by 123 and multiply by 100, and that'll give us the cost price of the stock. So if we take that 15,375 divided by 123 multiply by 100, it's 12,500. You never include VAT in purchases. VAT always has to be treated separately. It's a sort of one of the concepts of accounting. One of the FRSs that VAT has to be treated separately to purchases because you actually owe it to the tax person. You don't. It's not your money. So you bought the goods. So purchases have to go up by the 12,500. So purchases starts off as 1193. We're going to add on that 12,500. Okay, that we just worked out. Now the VAT then has to be the difference. So it's debit VAT. When you buy goods, VAT is debited. When you sell goods, VAT is credited because VAT purchases is debit, so you've increased the purchases even further, so it's a debit. So the difference between them is 2. So if I just take that 15,375 and take away the 12,500, that will give us 2,875 as our VAT. Now, VAT can be either a debit or a credit. In this case, VAT is a credit. So we've got a credit of 11.9. And I'm saying now we have a debit of 2,875. I'm not doing T accounts, but the debit and the credit are like pluses and minuses. They're opposite of each other. So we're going to have to take that 2,875 away from the 11,900. Now the stock again is this figure here, 12,500. It does not include the VAT. So we have that stock. It's in transit. It's not in our warehouse, but we own it. So we have to put it into our warehouse. So we're going to put the 12,500 into our warehouse. So we put it into our closing stock. And that's our VAT working done. And that's our goods in transit working done. So just for all of these, where you see VAT, Creditors or debtors will include the VAT. Purchases and sales will not. Okay, that's the golden rule on that. Number 3 then is our bog standard depreciation working. So it says provide for depreciation on delivery vans at the rate of 20% of cost from date of purchase to date of sale. Great question. There's no residual values, nothing like that. We always work through it in a very specific order. So the first thing is we need to know what the delivery vans are now. So delivery vans started off at 480,000. Okay, we traded a van which cost 35 against a new van costing 80. So we don't have the one that cost 35 anymore, so we take it away. We do have the one that cost 80, so we add it on. Okay. So the delivery vans that we have are 525, and we're going to use that in our depreciation. So we'll work out our depreciation based on those. So I'm going to use two numbers, 20% of and 20% of. So for the first 9 months of the year, we had 480,000 before any transaction took place. So we're going to multiply 20% of 480 by 9/12. For the remainder of the year, we had 525. So we're going to work out 20% of 525, and it'll be by the remaining 3 months, 3/12. And that gives us our depreciation for the year. So apologies for the delay on these, but I have to do the sums. So the two of those added together are your depreciation charge for the year, 98,250. Okay, so that 98,250 gets added to our accumulated depreciation, because that's our charge for the year. Accumulated depreciation is our total charges from the time we started depreciating. So we started off with accumulated depreciation on delivery vans of 70,000. We have to add on this 98,250 for this year. Now, what we don't have anymore is the depreciation on the van we had. So we have to work out how much that is. So it was 20% per year. So if we find 20% of the van we sold, so the van we sold was this 35,000. And we work out how many months we had it for. So it tells us we bought it on the 30th of the 6th, 2018, and we sold it on the 30th of the 9th, 2022. So we can go forward from there. We had it 6 months in 18, all of 19, all of 20, and all of 2021. So that's 12, 12, 12, and 6, and then we have it for a further 9. So 12, 12, and 12 is 36. Then we had it for 6, so it's 42, and then we had it for another 9, so that's 51 months. So that's, when you can work it out, it's 4 years and 3 months, or 51/12 is the way I would do it. So I'm going to work out that sum and take that away. So 20% of 35,000 by 51/12 is 29,750. We no longer have that anymore, so we have to take it away. So I can work out my sum now is 70,000 plus 98,250 minus 29,750. And that becomes my accumulated depreciation of 138,500. Now, anytime you sell a van or any asset, and you should know this from all of your questions from service firms, club accounts, everything else, if you sell an asset, you have to work out if there's a profit or loss on the sale of the asset. So you do that by comparing the value of the asset to what you received. So the value of the asset is its cost minus its accumulated depreciation. So we've just worked out its accumulated depreciation. We know it costs 35,000. I'm going to take away the 29,750, and that'll give you a value of 5,250. So in the question, it'll tell you that we got an allowance. So we got an allowance of 3,000. So we got 3,000 for something that was worth 5,250. Therefore, we made a profit. So we got 2,250 of a profit. So we made more than what it was worth, and that's going to go into our other operating income. Okay, so the last step then is the check for the net amount will be included somewhere, because it has to be. So it was included in purchases, which it shouldn't be. It shouldn't go anywhere. Basically, it should just go. We should have done everything there. So it's treated as purchase of trading stock, which is purchases, right? So we have to take it out of purchases. The check for the net amount is the new van minus the allowance. So the new van cost 80,000. We got an allowance 3,000. So they gave us 3,000 for the old van, which means we had to give them a check for 77,000, which we're going to take out of purchases. Okay, so um, that's the depreciation working done. Now, there's loads of ways that different you can do the suspense working. I have a very specific way of doing it. So, if you're watching this and you're not in my class, you can stick with your own teacher's method or follow mine. It doesn't matter. Just be consistent with what you do. So it says the suspense figure arises as a result of the incorrect figure for mortgage interest, although the correct figure had been put in the bank account. So the mortgage interest figure is wrong. What they mean by that is the mortgage interest paid figure, this 2,300, is wrong. So we have to work out how much that is. Now, while I'm doing that, I'm going to work out the mortgage interest and the mortgage interest due, because it's a quicker way for me to do it. So I'm going to go and look at the mortgage interest, and I've got a 3% fixed mortgage, including a 50,000 issued on the 1st of the 6th, 2022. So I'm going to 3%. I've got 270,000. And I have that for the first 5 months of the year because I got an increase in my mortgage on the 1st of the 6th. So that's 5/12. And then for the remainder of the year, I have 320,000. So that is going to be my mortgage interest figure. So, 0.03 by 320. 7/12. So I can add the two of them together, and my total mortgage interest bill for the year is going to be 8,975. Now there'll be some drawings in that later on, but I'll worry about that. Now after that, anytime we've mortgage interest, we will also have mortgage interest due. So to do that, we have to take away whatever we've received. So anytime I do mortgage interest, I'll do mortgage interest due straight away. And the same with investment income. I'll do investment income due. So we've received 8,750, or we've paid, the total bill is 8,975, of which we've paid 4 months. Now, 4 months is basically 4/5 of this number here, okay, because this is 5 months, so 4 months has to be 4/5 of it. In nearly every question it's just that number, but in this case it tells us it's 4 months. So you can do it a few ways. You can work out 4/5 of that, or you can work out that you've paid 3% of 270, because you had 270,000 for the first 4 months. And if we multiply that by 4/12, that will give us, just copy that, that'll give us 2,700. So we've paid 2,700. Now, we had that number wrong in our question. If you look at it, we said that we thought we paid 2,400, but we've paid 2,700. So my mortgage interest due is 8,975 minus the 2,700. Now, none of that really is to do with the suspense working, but I want to get that working out of the way while I'm thinking about mortgage interest. What is important is this number here, 2,700. So if I compare this now, I need to change this 2,300 to 2,700. So the debit side has gone up by €400, and everything in accounting has to balance. So this now is 328,700, and the credit side is 328,6,700. So the debit side is 400 more than the credit. So to make it equal in the suspense, you have to adjust the number that incorporates suspense. You have to correct the mistake. So what they've done is, assuming that was just that, we have put in 2,300 here, and to make it continue to balance, they just put in an extra 400 into the salaries and general expenses, and that continued to make it balance. So once we've corrected this, we bring this 2,300 up by 400. Therefore, the debit side and the salaries and general expenses has to come back down by 400 to make it to continue balance. So our salaries and general expenses come down by 400 euros. So we've got 136, 400 minus 400 euros. So now both my numbers are still 328,600, 700. All right, so that's my interest part. Now my second part with the suspense is that there's a discount received entered only in the discount account. Now we receive discounts from creditors. So when we receive a discount, that's an earning. So discount received will go credit discount, debit creditors. So creditors need to come down by 600 euros because we've received a discount. We don't owe the creditors the 600 euros anymore. So I've already changed creditors. So I need to bring them down by 600 euros here. Okay. So that fixes creditors. Now what does that look like in my balance sheet? In my balance sheet, creditors are on the credit side. So I've taken 600 away from them, which means this side is now down to 328,600, 100. And we know that this side is correct. So to make that continue to be correct, I have to bring this side down by a further 600, which is my salaries and general expenses. So I'm going to take 600 away from there. And that's my suspense working done. Now, number 5, standard patents working. So again, it says patents which incorporate 2 months investment income are to be written off over 10 years, commencing in 2020, or which commenced in 2020. And that word which commenced is really important because we're doing the accounts for 2022. So just be very aware of that. Okay, that we're doing the accounts for 2022. So 2 years depreciation has already existed. Now, before we even get to that, again, I always work out the investment income and investment income due first. So the investment income is 4% of 180,000. And I got the things on the 1st of the 7th, so I only have them for 6 months. So that's 3,600. Okay, my investment income due will be 3,600 minus whatever we've paid. Now it's already told us in the question that we paid 2 months investment income. So 2/6 of 3,600. So it's only 6 months. As a third, so that's 1,200 euros of investment income. So we have to take that 3,600 minus 2/6. So my investment income due is going to be 2,400 at the moment. It might change again. All right. Now that 1,200 is included in patents. Now to take it out of patents, you have to add it on, and it's to do with debits and credits. Maybe your teacher can explain why, but incomes, which investment income is a credit, patents is an asset, they're a debit. So when you include them together, they're actually taken away from each other. So to take the investment income out, you have to add it back on. So my patents at the moment are 48.8. I'm going to add back on the 1,200. It's this 2 months. It's not the 2/4, it's the 2 months. And that brings me up to a nice round 50,000. Now you would think it's written off over 10 years. We'll divide by 10, but you don't. Okay, you're dividing by 8. And the reason you're dividing by 8 is because this 50,000 is 8/10. There's already 2 years depreciation, 2020 and 2021 in it. So if this 50,000 is 8/10 and we want to find 1/10, you don't divide by 10, you divide by 8. And again, maybe your maths teacher can explain that to you if you don't understand that one. So the patents written off will be 50,000 divided by 8, probably 6,250. Just check that. 6,250, and then of course that gets taken away, and that gives you your patents figure of 43,750. Okay, so I hope that's straightforward enough for everybody. Now, next one. Goods taken by Leahy for his own personal use were not recorded. So that's drawings. So loads of businesses, shops or whatever, will take stuff for their own use. You can't include that in your account, so you have to take it out as drawings. So it says the goods had a retail value of cost of 3.6, which is cost plus 20%. You can take it as a rule anytime it tells you that. Work back to the cost price, because stock is always valued at the lower of cost or value anyway. So take the 3,600, divide it by 20, multiply by 100, and that'll be, sorry, that should be divided by 120. To get it down to 100, you have to divide by 120, multiply by 100. So that's 3,000. It does not get taken out of stock, right? So it's already been taken out of stock. So stock is valued by counting up your stock, so that's gone. But it has to get taken out of purchases. So you just remove it from purchases. And it's just a movement. It's not actually, the thing with this question would balance if you never did it. Take it out of purchases and add it into drawings. So you move it from purchases into drawings. There's probably drawings already. There is 45,000. And add on the 3,000. That's that one. It should be easy enough, I hope. Revaluation of buildings. Now, the depreciation of buildings should come first. It's not telling you otherwise. So you should always depreciate. Oh no, sorry, let me just read it. We might depreciate second. So it says the company revalued. This is really important. I would have got this wrong if I rushed into it. It says the company revalued the land and buildings at 950 on the 1st of the 1st. So they're actually revaluing them at the start of the year. The land element of the new value is 200,000, and this is yet to be reflected in the accounts. So they put them in the accounts at the old value of 850. So they're asking us to do the revaluation reserve, but it's at the start of the year. So we just move our buildings, our land and buildings, and we're going to bring them from being 850 up to 950, which is a revaluation surplus of 100,000, and that goes up to 950. Now, when you revalue, depreciation goes to zero. So your accumulated depreciation will have started at 105. And that goes to zero. Okay? And both that 105 and the 100,000 go into the revaluation surplus, or the revaluation reserve. If there is depreciation, so if it was done at the end of the year, you would also work out your depreciation charge for the year and include that. But in this case, we don't have to. We've got the 100,000 and the 105. That brings you up to 205. So what happens then to land and building? So it tells us they're 950, and of which the land is 200,000, and we're only depreciating buildings. So the depreciation of buildings will be 2% of 950 minus 200, so 2% of 750, which is 15,000. Okay, the accumulated depreciation currently is zero, but you have to add on this 15,000, so it goes up to 15,000. So when you revalue at the start of the year, you will have accumulated depreciation in the balance sheet. When you revalue at the end of the year, you won't. So just take a note of that. Okay. Now, my bank rec statement. Again, I have a unique enough way of doing these, so just be careful. So our bank balance. And the bank's bank balance don't match. So we believe we have minus 53,600 in the bank, or an overdraft of 53,600. It's on the credit side. The bank believe we have an overdraft of 50,300. So neither of those are right, so we have to work out the new number. So anything we have done will be in ours but not in the bank's, and anything the bank have done will be in theirs but not in ours. and we have to correct them. And when we correct them, when we put them in the right place or the second place, the whole thing will balance. So, a credit transfer had been received in respect of a debt. Credit transfer is an electronic transfer of money. So the bank know about it, but we don't. So we have received 1,500, which we didn't know about. The bank do know about it. Okay. Now I'll come back to the rest of that in a second. Second one, a cheque for 1,800 had not been presented for payment. We know about it because we paid the bloody cheque, so it's in the 53.6. We've written a cheque. The bank don't know about it. Okay. So if we've done it correctly, they will balance. So 53.6 plus 1,500 and 50,300 minus 1,800. And they both are the same. So they're correct. Now we have to go back to them. The ones that the bank don't know about, we don't have to do a double entry with. So the cheque not presented for payment, we will have done all the double entry correct for it. But the ones that we don't know about, we will have done no double entry for, so we have to finish them off. So a credit transfer of 1,500 had been received in respect of a debt of 1,700 previously written off as bad. The debtor has agreed to repay the remainder within 2 months. So the debtor owes us another €200. So we have to add €200 onto debtors. That's all we have to do. So we haven't changed debtors yet. So debtors started off as, to find it here, 67.7. We have to add on 200. That's all. That recreates the new debt of €200. The full amount is bad debt recovered, which is an earning. So the full amount of 1,700 is a bad debt recovered. We had written off 1,700 as bad debt written off. We now get the money back in, so it's a bad debt recovered. And that's all we have to do. So that's that done. Provision to be made for investment income and mortgage interest due. Well, we've done both of those. However, it says 20% of mortgage interest is for the private section. Private section is drawings. So if we go up to the mortgage interest working, this is 8,975. We have to take away the drawings, which is 20%. So if we find 20% of 8,975, you get 1,795. So the amount that's going into our accounts is 7,180. That has no impact whatsoever on the mortgage interest due. You still have to pay a total of 8,975. So when we do our mortgage interest due, you're still using 8,975 as your starting point. The 1,795 is drawings, so we move it from interest and we put it into drawings. Okay, that's that done. Provision for bad debts to be adjusted to 6% of debtors. So the bad debt provision, 6% of debtors. So it's just 6% of the debtors figure, so 67.9. The new debtors figure. Okay. And that's 4,074. Anytime you have bad debt provision, you have to work out the change in bad debt provision. So the bad debt provision at the moment, it'll be on the credit side here, it's 2,000. It's 2,100. So there'll be an increase in bad debt provision, which is 2,100 up to 4,074. Always measure the change. If there is no bad debt provision, the change is 0 up to the new number. So it's 2,100 up to 4,074. 4,074 minus 21 is 1,974. So that's everything done. Now the rest of this is just about transferring all of the numbers in from top to bottom. Okay, so we can look at these. We can say what they are if you want. So stock, some of these go on twice. Stock will go, well, stock goes on twice. It's the only one. So stock will be in the trading account and a current asset. Creditors will go in the creditors, amount falling due within 1 year, current liabilities. Purchases will go in the trading account. VAT is, now I'll work this out, and where that number is after coming from, the 2875. If we now have a credit of 11.9 minus 2875, so it's still a credit, 9025. It's current liability if it's credit, current asset if it's a debit. Tangible fixed assets for delivery vans. The depreciation of delivery vans is always selling and distribution expenses. The accumulated depreciation will go in the tangible fixed assets in its normal spot. A profit on the sale of a van is another operating income. So we've another operating income. If we've made a profit on that sale, we need to put that in. So, did I make a profit? So I made a loss on the sale, didn't I? Jesus. So the loss on the sale of a van is anything to do with the van is selling and distribution. Okay. Jesus, I'm sure I confused you when I said that was a profit. You got less than what it was worth, not more than what it was worth. Mortgage interest goes in its own spot. Mortgage interest after operating profit. Mortgage interest due as current liability. Salaries and general expenses, admin. Investment income is investment income. It goes in its own spot. Investment income due as a current asset. Patents is an intangible fixed asset. Patents written off will be admin. The cost price, I just used those to mind them. Alright. I use them to work things out. Drawings will go into the finance buy as minus. Okay. You take them away from your profits. Land and buildings is a tangible fixed asset. The accumulated depreciation, tangible fixed assets, obviously is a minus. The revaluation reserve is the finance buy. Depreciation of buildings, admin. The accumulated depreciation, which of buildings, as I said, was tangible fixed asset. The bank's a minus or a credit side, so that's current liability. Debtor's a current asset. Bad debt recovered is another operating income. Bad debt provision, you're taking that from debtors. And the increase in BDP is an expense, so it's a selling expense. So selling and distribution, anything to do with debtors is selling. So that's them all, and then you just have the main ones, the other ones from the question that we haven't changed also have to go in. So for instance, equipment is a fixed asset. Discount net, because it's a credit, is other operating income. The investments will go in tangible or financial fixed assets or into investments. That's opening stock, so open your trading account. Sales is in your trading account. Salaries we've changed. Advertising will be a selling expense. You don't do anything with the investment income received or the mortgage interest paid because you use them to work out the dues. Drawings we've changed. Rates will be a admin expense. PAYE as a credit will be it's taxation, so it's a current liability. VAT we've changed. Bank we've changed. And capital goes in your finance buy. Okay, so we can go about putting the numbers in now. Just you can fly through these now. It's up to you how you go about doing them. You can start at the top from sales, or you can just start throwing numbers in as you've come across them. And I've just copied and pasted this from a previous question, so some of these aren't in these. So anyway, I'm going to just put the numbers in. So sales, we know, didn't change. So 1848900. And then our opening stock from the question is 70,700. The purchases we did change, it was 1126. The closing stock we changed. So the closing stock is one of the first ones. Oh Christ. Sorry. Just need to total out some of these here. I've gone wrong there somewhere. I know it's 1126 because I'm looking at the answer in front of me that I did it earlier. 1193. 500. Okay, so we can slot those in. So the closing stock 93,650. So opening stock plus purchases minus closing stock. Take that answer away, and that gives you your gross profit. It doesn't matter whether you do selling and distribution or admin first. You'll often see admin in your marketing schemes first, but it doesn't have to be. So admin is depreciation of buildings. We know, I can remember some of these from the top of my head. So that's 15,000 for the year. The salaries and general expenses, I know that is 135,400. What other ones have I got? Patents written off. That was 6250. Just taking these from wherever they've come from. Depreciation on equipment. I'd say I didn't work that out. That has to be working at the end. Equipment to be depreciated 10% of cost. So equipment started off at 153,500. So that's 15,350. And I'll need to remind myself to add that into the accumulated depreciation later. And then my last one would be my rates. 42.8. So from my selling and distribution, any expenses that are left. So from the question, I've advertising 16,000. I know I've got depreciation of delivery vans, loss of delivery vans. So the depreciation of vans was 98,250, and the loss in the sale of van 2250. And then I definitely had an increase in BDP, which was one of my last workings, 1974. So while I have that, I'm going to work out. I'll just show this, the depreciation of equipment. So it's 10% of the equipment. So 153,500 is 15,350, and then my accumulated depreciation was also 15,350. There is no accumulated depreciation, so 0 plus 15,350 is 15,350. So my other operating incomes then, I've got my bad debt recovered off the 1,700. And then I've got my discount 7.7. And I think that's it. I'll have a check in a second. So add up my expenses. And then take those away. Oh, I'm missing something there. 2148, and what am I missing? 16. No, I'm not missing anything. That's 16,000. So I take those expenses away. Again, I'm rushing this, and you need to take care in your exam. You won't lose marks for that sort of stuff, but you will if you don't put in 16,000. If you put in 1,600, you'll definitely lose marks. And that's sort of stupid way to lose marks. If you make a calculator mistake, you lose them once. That's all. So that is 412, and then we have to add on the 94,421. Yep, and that's my operating profit. So 421976. Okay, I have to add on my investment income to that. It's 36. You don't actually have to show that total, but it's good practice to take away your mortgage interest, 7180. And that gives you 418396. All right, so hopefully that's right. Our balance sheet, I've got 4 columns. I wouldn't be using 4 columns there. You don't have it in your exam, but it's just for ease of use here. In effect of 3 columns, and I just need the extra one for my bad debt provision. All right, anyway, my patents I worked out to be, where are they? 43,750. Right, and then I'm on to my tangible fixed assets. So I know I've land and buildings, and I can remember what most of these are. So I won't have to flick over back to my workings. But my land and buildings are 950, and my accumulated depreciation was 15,000. So that's 935. Then on my vans, they were 5 something, weren't they? So 525, and my accumulated is 1385. So 525 and 1385. Then I've got my equipment, which started off at 153 and then 15350. Okay, so I need to total all these. There's no marks going for the total, but you lose a mark if you don't put them in. So in effect, there is a mark going for the total. So that's 1459650. And I'm going to have to add that on to my my tangible, and then the other one I need to remember is my investments. So easy to leave out investments. So make sure you get that in. So my 4% investments, it's the full amount. Don't mind that it's not the income, it's the full amount. And it doesn't matter when you bought them. So 180. So we're going to add those 3 together, and you get 1683400. Right, our current assets now. This is why you need my first column. So I'm going to go my debtors less BDP first. So my debtors are they're in the bottom somewhere, aren't they? 67.9, and my BDP is 4074. So 67.9 minus 4074, and that gives us what my debtors is. Okay, 63,826. That's the amount we're hoping to get. Now, to that, I have to add my closing stock. So my closing stock was 93,650. I have to add my investment income due, which was 200. Was it? No, it's 200. 36. So you've 1200 there, but I forgot to take away this 2200. So we've got 24 minus another 22. Again, careful with that. Should have spotted that when I was going through the rest of them. I missed it. But that 200 is my investment income due, and that's my current asset. So if I add those 3 together, I think that's all I have. I've got 57676, and then onto my current liabilities. I've got my creditors, which I changed. So now my creditors are 113 375. I've got my VAT, which again I know I changed, and that's in my workings, so it's 9025. That's one of my first workings. My bank, I did my bank rec statement, and I know that my bank is 52.1. Current liability is a minus. Then I've definitely got my mortgage interest due, which is 6275. And finally, I have my PAYE from the question, which is 47. I'm hoping all this is correct, so I've obviously rushed a lot of it. So we've our two numbers there, 185475, and the other one, we take them away from each other. And we get minus 27799, which doesn't seem right, but sure. We'll see in a second, which we'll add on or take away in this case from our fixed assets, and you've got your total net assets of 1655601. You don't have to call it total net assets if you don't want. Right, my mortgage is 320. My capital on the 1st of the 1st is 762. Right, so then my extras I have to put in. I've got to put in my revaluation reserve, which is 205, remember that. I've got to then put in my profit and loss, my net profit, 418396. 418396. Then I have to remember to take away my drawings. So my drawings was from my workings, or I had it in my workings. Which is equal to 49795. So minus 49795. Not too confident on this at all. Alright, do that sum, and hopefully there's a 1 at the end of this. And there is. Then remember to add on your mortgage, and if everything's right I should get 1655601. And the suspense continues. 1655601. So happy days, that's balanced. A couple of little things, the VAT and that. The bad debt recovered and so on, but nothing overly difficult, and hopefully that was of some use to you.